The market is rocketing higher today. It's up over 2% right now. And what I want to do is with you step by step by step, walk through exactly the trades that I want to put on. Now, here's the thing is that I am competing in the US Investing Championship. So is Joe, and we are looking for the best trades in the market right now. So I'm going to walk through my exact trading plan, looking for those brand new trades with you right now. And this PowerPoint is linked down below. There is absolutely no obligation, no nothing. You click it, you got it. So if you have any excuse to for not having an amazing returns this year, that's up to you, my friends. All I'm going to do is follow this exact plan. And let's get going, right? This is the OVTLYR Trading Room US Investing Championship Invitational live stream. This is where I help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. We're almost at 50,000. Almost at 50,000. You want to subscribe so you don't miss out.
That's exciting, Chris. I'm looking forward to that day. We better celebrate with some giveaways.
I want to celebrate with the new Rolex, but we'll do some cool stuff too. Any excuse for a new Rolex is my excuse for Rolex. So here's what we're going to do. We're going to look at 3 plans today. Plan M, ETF, and plan Sit in Cash and Don't F Up. That is what we're looking at. Now, I am in plan Sit in Cash, Don't F Up, and I've been in Sit in Cash, Don't F Up for a while. In fact, link down below is also all of my trades for this year. Now, granted, this year's been off to a decent start. And when I say decent, like it could be better, right? Earlier this year, before the silver crash, we were up a lot more. But in the US Investing Championship, if you can believe this, 80% of the field is showing negative returns. That's unbelievable. I would have never thought the best traders in the world, 80% of them are showing negative returns. And Joe, the crazy part about that, that's not uncommon. That's not uncommon at all. In fact, I don't know. Joe, do you think you could quickly whip that link over to me real quick from yesterday's interview of Constantine? I don't have it anymore, and that studio is gone. If you could find that for me, that would be awesome. No, hang on. We can just go to Constantine's profile. Hang on. We go to x.com, and then we go to Constantine. So Constantine was one of the guests that we had on yesterday in the Champion Trader series. Hang on real quick. Let's go to There it is. Constantine. He had it.
Second link. Yeah.
Yeah. Boom. This is what I was looking for. By the way, Christian Flanders is going to be on next week, next Thursday. You like that?
Oh, nice.
Yeah. So this is unbelievable. In the US Investing Championship since 2020, you've seen how it's grown from 124 to this year to 627. The number of reporting profitable has grown, but it is not much. And the percent reporting profitable, look at this, 14% in 2021, 10% in 2022, 20% in 2020, 23%, 27%, 19, and year to date so far. This is unbelievable, Joe. 20% is the average for the number of people with positive returns in the US Investing Championship. I couldn't believe it. That's crazy to me.
That's incredible. 2022 was a really hard year too, wasn't it?
It was. I was down that year. I was down 20% in 2022. So but I've been positive every other year on the board up here. I just can't believe that of the greatest traders who have taken the leap to compete in the US Investing Championship, 80% are putting up negative returns. This is unbelievable. I just want to share that real quick because my trading plan that I'm using this year is linked down below. I don't want you to be in that 20%, or I do want you to be in that 20% where you're very profitable this year. And again, if you want normal returns, this isn't for you. Go watch some other YouTube joker, right? But if you want OVTLYR returns, then you're in the right place. So plan M, ETF, and Sit in Cash. This is where I'm at right now, and I got distracted. What I wanted to show you was how long have I been sitting in cash? Since February 4th. Since February 4th. And OVTLYRs are dominating the top 40 enhanced growth division. I know. How exciting is that? How exciting is OVTLYR? Hang on. Since you mentioned it, let's see how many of our OVTLYRs are in the US Investing Championship returns so far. So OVTLYR. I see 9 on the board right now that are tagged with OVTLYR. And by the way, if you tag yourself with OVTLYR, we send you a Team OVTLYR shirt, right? Because we want you to be like a part of the team. So it really does make a difference. I see Don. I see Ian. I see Mark. I see Art, which is Sini Wahoo. I see Sheetal and Jeff. And I see Gabor. I see Rick. And then I see myself. Joe, I'm dead last amongst all the outliers. Isn't that the best, dude? No joke about this. I think that's probably the greatest outcome I could ever ask for. That all of our outlier customers are actually beating me. Man, how cool is that? How cool
It
is
is
that?
really cool. It says a lot about your messaging and getting across to people that they need to be in control of their plan, because they're obviously not following your plan to a T if they're beating you, right? So this is
Yep.
fantastic news.
I'm very excited. Nico has a great question. How do you show a red candle if the market's up 2%? So the way that candles work is the opening bar is established first, right? The opening price level is established first. If it is below that point, so the opening price for the day was 676.39. It is now below there. It is at 674.41. So that's how it is a red candle right now. If it closed, or not closed, but if the price was above the opening price, that's what makes it a green candle. That's what makes it a green candle. So, and yeah, 0.9%. I know. What a pathetic return. How dare I? I should be embarrassed of myself. Now, here's the thing. I want to be 100% clear, not just with you, Mr. B, but across everybody who's watching this. It's a whole year game, by the way, right? It is a whole year game. And my game right now is not losing money. And to reiterate the point, 80% of the field has a negative return. So Mr. B, I don't know. I feel like my 0.9% return is better than 80% of the people who felt like they could compete this year. But, you know, whatever. Plan M, this is our most aggressive plan. Our most aggressive plan will tell us when to be aggressive in the market and when to be defensive, right? Now, we had a couple trades on early on in the year. And in fact, since Mr. B is questioning everything about me, I'm going to go over to the account view and I'm going to show right here. Oh, yeah, Chris was up over 50% at one point. Over 50% at one point, which is pretty awesome. And then the stupid silver hit us, right? The stupid silver hit us. But you know what? I still ended up with a positive return, even though silver collapsed more in a single day than the last time it collapsed that much, is when Jesus was on the earth and Judas betrayed him for 30 pieces of silver. All right. So I'm actually pretty stoked about that. So it is what it is. So let's keep on going here. Now, our most profitable plan ETF, is our second most common plan. And this is our ETF plan for when nothing's set up for plan M, but sit in cash doesn't really make sense. There actually are opportunities, right? So we're going to look at plan M, because this is really where we want to start. Now, if we had any trades on, we'd be looking to reduce those trades before doing anything else. And the most important part of the plan is planning on the plan not going to plan. Because, of course, if I could have predicted the future, which maybe Mr. B can, but I can't, and I saw, hey, you know what, my account's at 50%, I would have liquidated at that very point in time. But unfortunately, that's not how the game is played. I can only trade based on my buys and my sell signals and just run that as far as I can. So number one thing we need to do is look at what the market is telling us. Look at what the market's telling us. So plan M starts with the market here, with the SPY having a bullish trend, a buy signal, the fear and greed heat map being under 70 and rising, with full stocks breadth being bullish. So let's start at the top here. SPY having a bullish trend. Let's go look. As of this very moment, we don't have a bullish trend. We still have a 10 under the 20 and price under the 50. So because of that, we don't have a bullish trend. We have a bearish trend, in fact. Now, mathematically speaking, it is very possible that by tomorrow, it could be bullish. Just that fast. Now, so we're not there yet. So we won't actually put on any trades today, but we're going to go through the steps so we're not rusty. Buy signal on the SPY, looking at this right here, we can see the sell signal in place. Now, just yesterday, we had a buy signal. And actually, I got to tell you, if you were short the market right here in the midst of a downtrend, if you took this sell signal as a short signal and you got that buy signal, which is exactly what it's meant to be, is a buy signal within a downtrend should be a short covering signal, is how I'm looking at it. You would be a very happy boy today. I'm just saying.
That'd be a nice signal to get, wouldn't it?
You would have had all of your shorts wrecked had you not followed that buy signal right there. So actually, that's pretty cool. So still, we are sitting on a sell signal. Now, I don't know if this is going to be a buy signal tomorrow or if it'll be a sell signal tomorrow. So because of that, I don't know. I'm just going to continue to follow my plan. So literally by tomorrow, both of these could be flipped. SPY fear and greed heat map. We want to see that under 70 and rising. And what we see right now is it is rising, and it's at 36.16. Yesterday it's 34.87. So it is rising, 34 and rising. And I'm sorry, 36 and rising, which is under 70 and rising. Now, full stock's breadth. What is this measuring? Going over to our market breadth tab, what we see over here is all the sectors except for energy have positive breadth. Now, how do we measure breadth? Breadth is the number of buy signals. So the percentage of buy signals compared to the 10 EMA of that percentage. Okay. So we can see right here, there was a bullish cross over on March 30th for the market right here. And looking at this, I can see at the bottom down here, we've got more uptrends and less downtrends, which is going to take us to the next section here, which is our outlier channels. This is a score of 2. A score of 2 because we have more uptrends and more downtrends. So they're both lit up. So then let's look over here at sector breadth. All of the sectors have positive breadth. You don't have to click into each one. You can just see it right here, with the exception of energy. Okay, cool. Sector relative greed greater than, what does that mean? The sector's greed being higher than the market's greed. Now, this actually makes a huge difference. The easiest way to do this is on the summary tab up here. Click this. You can see the market's fear and greed score, 36.16 that we talked about a few minutes ago. Now we can see the fear and greed score of all of these individual sectors. Every single one of them is above the market. That's a great sign. But remember that energy has bearish breadth, and it may be above 36, but it's moving down. So energy is completely excluded. And sector fear and greed heat map, all of these are under 70, and they are rising, excepting energy. So that's pretty cool, right? Let's keep going here, because the next step, we need to go into the screener. I could probably update this because we do have a brand new screener in the last couple of weeks that is a huge time saver. So first, let's go to the screener, and you can save your screener criteria. In fact, I'm going to put up one of my screeners here. I'm going to do Plan M update, hit apply. So this is my screener criteria. It's all the sectors except for healthcare. Healthcare is permanently excluded. And I'm not just making that up. Every time we added healthcare to our backtesting data, it actually worked against us. So we have removed healthcare from the plan. Now, energy, we're also going to take out that sector because, as we saw earlier, the sector is not set up. Outlier signal return being positive, so an instant backtest right there. On any stock, it'll show a positive return. Capital efficiency, I'm wide open. 30-day average volume, I want over 1 million. I want to see a buy signal in place, which is the same buy signal that's down here. These are one and the same. Relative volume, this is if the current volume is greater than the average of the last 3 months. The signal type, you can change between swing and active. I like the swing signals, and that's what Plan M is based around. Sector relative greed. Let's go back to the screener. And I'm sorry, back to the breadth is what I meant to do. Back to the breadth. And we'll see here the summary of the relative greed, 36.16, is this. And it's just easier. That is what we're measuring. That is what this value is here. That's what this value is right here. So we can just make it as simple as having a relative greed of greater than 1. So you don't have to eyeball each one. It's already right there. Price change, if you want to look for last X number of days with X number of price change, you can do that. Price range, I want a minimum $10. I'm open on the high end. Market cap, I'm wide open. Fear and greed, I'm wide open. Fear and greed heat map. Actually, I do need to update my screener for this. I want to see rising. The fear and greed heat map, I want to see rising. Now, what does that mean? That show me this. Rising. Okay, it's got a checkbox there, so it should be working. That is the fear and greed heat map on the individual stock that it's rising, which is the same as the fear and greed right there, rising. Overlay indicator. Uptrend indicator is the same as this uptrend indicator right there. So there's a little bit of redundancies between A and B, but they're the same thing. Now, the thing here is that if we apply the filter, nothing will pull through, because remember, the trend of the market still shows a sell signal. I'm sorry, a bearish trend, and the sell signal is still in place on the market. So if we take those two off and hit apply filter.
Hey, Chris, another nuance. If you click on capital efficiency, some folks report that they click all 3 of those in order to get all. So some browsers may want you to click all 3.
Oh, that's good to know. There you go. All right. So these are the best stocks that would fit the criteria that I put in. Now remember, doesn't have the market trend and doesn't have the signal. So I'm looking for trades up to where's the I just saw it a minute ago. Looking for trades up to 5 days after the buy signal is generated. Okay, so we can go back in time because it starts with current signal date, and we can see April 8th, 7, 6, 2nd, right? So we're looking for calendar days. Let me double check that I got this on here. Yeah. So it's calendar days. And so right now we're looking at 1, 2, 3, 4. Yeah, we could do up to the 2nd. Why not? Just for funsies. So we can export this now, right? Isn't there a button to export? I thought I saw this. Hang on. Oh, collapse and expand. I didn't know that button was there. Oh, yeah. Joe, do we have an export button?
I don't think there's an export button. I think it's a highlight and copy.
Okay. I thought we had an export button here, but that's okay. You can literally just copy like this down to the 5 days that you want to look at, and then copy and go to Excel and paste. There you go. Now, the only reason I'm doing this is to get this over into TradingView. The only reason I'm doing this is to get this into TradingView. Now, I am noticing that if I do it this way, the VacLab screener was obviously easier. I'm not going to sugarcoat it. The VacLab screener is definitely easier. But the way that I like to do it, and I'm looking right here, there's quite a few names buried alongside of the tickers. So what we can do is we don't want to have any blanks. An easy way to do. Hang on. I want to try this. If I hit the buy, should be just the tickers. Boom. Excel wizard right there, my friends. So now what I'm going to do is this and adding a comma. Now you don't have to do this. I'm just telling you my way to do it. Okay. Copy, paste. There we go. Now I can take this list. I can drop it right in TradingView. Now the reason I want to drop it in TradingView is A, I want to be able to see the charts, and B, I like to double check the order blocks on TradingView. So one thing I'm going to do is I'm going to unflag all symbols. So there we go. We're all unflagged. And I'm just going to do a quick glance right here. Very quick glance. How many symbols have an order block in my way? Oh, this is a different DTE. I remember this from this morning. There you go. That DTE. Not this stupid DTE. Yeah, let's add that in here. Okay. And then we'll alphabetize it.
Now, Chris, explain how you knew that was the wrong DTE.
Because I looked at it this morning and I'm like, something doesn't look right. That's how. That's my answer.
For me, I like to look for the NYSE in the top left of the screen, and that'll help me. And also, you know, the name. A lot of times, the name will tell you that you picked the wrong one. So,
yeah, that would be really good. I honestly, I didn't even think about that, Joe. TradingView continues to impress me with all the little details like that. Okay, so we're going to very quickly browse through these, and anything that has an order block in our way, I'm just going to delete it. Like, you won't even see it again. Okay, so that is literally the only thing I'm looking for, is if there's an order block.
And again, for the
wait a minute. I have to turn order blocks on.
Is a colored blue box above the current price.
Yeah, I had it turned off. Let me restart. Sorry, that's my bad. So like that, right? Now, why do I care? If the order block is within 2%, I'm not interested. It doesn't matter how old it is. Okay. So some of them you may have to measure, and we may hear in a minute, but you can eyeball this real quick and say, yeah, that's within 2%. And I'm just going to delete it. Like, I'm not going to come back to it. This one, not, by the way, tell me order blocks don't work. BHP. Okay. So this one has room up to this order block. You can measure it if you really want to. This has 5%, give or take. So it would stay on. Okay. 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 All right, so this one needs to go. This one has an order block right there that's still active, so it needs to go. This one needs to go. And see, like, I am very impartial. I don't care. Any reason that you have to dismiss a trade, just move on from it, okay? Don't try and massage your way into any trade. It's just not going to happen. It's okay. Just move on.
Now, Chris, was there an age on order blocks for Plan M?
Any age.
Okay.
That's for entries. Exits are different. And you can get your charts to look exactly the same as mine in our Discord. Just add in the deep thought indicator, and you should be good to go. And it's going to show the exact same order blocks I have here. Like on Netflix, I'm not interested. Now, tomorrow I could be, but as of today, I'm not. And that's why we take trades up to 5 days old. And see, it's not hard, right? This is one of the easier things to do. Just browse through the charts real quick.
That one may be the wrong ticker. That was
I was just noticing this one and this one, both are in downtrends. Okay. Give me a different PSO. Because this PSO is a POS. Oh, how you like that, Joe?
I suspect that you can force the filters in this screen right here by clicking stocks. And then maybe once you click stocks, tell it you only want the New York Stock Exchange.
That would be nice. But they're not all on the New York Stock Exchange. It's the only issue.
Mm-hmm.
Some are on ASX, some are on NASDAQ. Okay, so POR is good. Rio is good. PAC is good. WLK is not good. The new PSO. There you go. And the new PPL. It just cleared this one. Now, how much room does it have to the next one? 1.5%. So it's going to go. Okay, so I narrow down the list over here. Now, what I like to do is now organize them and only look at these guys and sort them by the... all of this is good. This is what we put in our filter. Verified on today's chart. And all criteria must be met before moving to position sizing. And what I like to do is I like to work my way down through the... oh yeah, all that's good. Just work my way down through the highest back test and work my way down. I'm trying to see if I have notes on here about that. The highest back test and work my way down. Give me just a second here to glance through my notes. No. Goes before earnings always. Rolling. Okay. Earnings. We are avoiding them completely. Gap and goes and gap and craps. Exit signals. Options. And the new trading rules. I could actually delete these. We'll do that later. But yeah, it looks like I don't have the start at the highest back test and work my way down. But that's what I like to do, right? Because at this point you've got, I don't know how many that is. Maybe 18, maybe 20. Makes life easier if you know what you're looking for. So let's, man, I don't think there's an easy way to organize this here. Unless I do 2 of them. There we go. So BHP, outlier signal return is what I'm looking for. BHP, outlier signal return is 6613. I mean, for example's sake right now, I'll just continue on with these in the order that they are. So BHP, we're going to look at the options liquidity of this one. And what am I looking for? Here. Monthly contracts that are at least 30 days until expiration. So let's start there. Let's open BHP. Option, here we go, BHP. And okay, so we're at monthly. We're at greater than 30 days to expiration. Let's go to the next step. Check further out in time if needed to find liquidity. We want to have 200 plus open interest at the chosen strike. So we can see basically from here down, we have more than 200, which is exactly what we're looking for. Next, we want to have a 10% max bid and ask spread. So this does require a little bit of math. Now, this math could be worth it to you, or maybe you could say, oh, this is too hard. I don't want to do this anymore. But for me, this is life-changing generational wealth opportunities we're talking about right here. So let's do the math. 8.7 minus 7.8 divided by 8.7. No, I did that wrong. Hang on. I mistyped. 8.7 minus 7.8, okay? And then divided by 8.7. So you're taking the ask minus the bid divided by the ask, and we want it under 10%. Now this one here, a little expensive, is at 10.3. So we could go down one and we could say 6.7 minus 5.9, okay, divided by 6.7 gets us to 11.9. So that's actually not helping us. Maybe we could go up one here, and it's still plenty of open interest. We could say 10.8 minus 9.8 divided by 10.8 gets us to 9. There you go. So this would be the strike that I'd be looking at. And in fact, if I were looking to trade today, that is when I start to execute, right? Now we need to go position size. So this is BHP. Current account value is 50,652. This is the outlier fund specifically for showing you exactly how to trade. And by doing so, right, we're putting our money where our mouth is. And 50,802, and this says 50,652. So it's about $150 difference. There's fees and such associated with that. So we'll count that. We'll count that. But what are we at? 50. It was a BHP. Yeah. So you can delete these. BHP. Now, linked down below is this exact spreadsheet, like 100% this spreadsheet I'm working on right now. And we're looking at the price per contract of how much? 1080, because worst case scenario, that's what I have to spend for it. 1080. Okay. 1080. And if I took this right now, if I only did stock, it would be nearly 100% of my portfolio, Joe. Nearly 100%. However, by using options, this would be a 17% account size for me. Now, that doesn't mean that's how much I'm willing to risk. I'm willing to risk 6%. And all of this calculation right here, your account balance multiplied by your risk percent divided by 2 times the ATR gets you the number of shares. And then number of shares divided by delta gets you a number of options contracts. All that's done automatically for you. You put in the name of the stock, it does it all for you. Just super simple like that. Now, of course, I run 6% risk. And the 6% risk is not arbitrary. What we did is we ran the Kelly criterion. And in fact, if you want to see how we got to that point in the Bravo class playlist over on my YouTube channel, I actually work through step by step how we got the Kelly criterion numbers. And what this is it's 1/4 Kelly. Okay, so Kelly criterion put it like 24%, which is huge. But 1/4 Kelly is very manageable for traders. So that's where that 6% number came from. Now, hear me out. Do not trade this size. You're not ready for this. I don't know who you are, what you're doing in your life. I have no idea how much money you have in the bank, and it doesn't matter. You're not ready to trade 6%. Okay? It sounds great now, but the first time you take a 6% loser, it's not going to sound so great. Okay? Keep that in mind. You are not ready for this. Start at 1%. When you are and I don't mean one trade, Joe. I mean, over 6 months, 8 months, a year of comfortable working at 1%, move to 2%. Don't jump to 6, okay? Working at 2%, get used to that size, then work at 3 or 4 or whatever. You need to scale into this, okay? I've been doing this for 17 years. 6% is great for me. I have no issues. Now, so then I would come through and I'd say, okay, I only need 8 option contracts. Now you're probably thinking, 8? What? That's crazy. You should be trading 80 option contracts. No, I'm not. Not at all, because that is way, way, way more risk than I'm willing to take. So I would come in here and I would go to this strike and I would change this to a quantity of 8, which you can't see because Joe and I are in the way. And then I would hit at the 1080 strike is the ask. But you know what? We could probably get filled at mid price, which is what it's trying to give us right here, and then hit send. But I'm not going to do it right now, Joe. I'm not going to do it. So that is how I'm going to look for trades. And in fact, I do see a little bit of optimizations that I could do as far as like getting it out of the screener and into trading view. I know using the VacLab bookmark, which bookmark lit, which is not official outlier code, but it is amazing. Saves a lot of little effort on that part. So I may still use the VacLab bookmark lit. But in the meantime, that is how I would get it from A to B to Z. So was that useful? Tell me in the chat. Type a thumbs up in the chat if that was useful, because there's a very real possibility Plan M starts tomorrow. I'm just saying, a very real possibility that Plan M actually legitimately starts tomorrow. And because of that, I want to be ready. I'll be ready, Joe. And I found some things that we could work on. What is this outlier trading with Joe?
So we've had quite a few questions here. It looks like it was a really good plan that you went through this, Chris. So a lot of questions about specific things that you mentioned, and there's a couple of locations that you can go to get those answers. Chris goes through this stuff pretty quickly usually, so get yourself a video and watch it, and take your time and rewatch it. Great videos to start with are the Alpha University videos and the Bravo University videos. And Chris specifically mentioned that just a minute ago regarding Kelly criterion. And when you get through those videos, you can check out the how-to guides and the outlier training playlists. So definitely check those out. You guys got a lot of questions about options specifically.
Yeah, and Joe has done an incredible job of putting this all together. So thank you very much, Joe. Joe, why don't we answer several of these questions as fast as we can? How's that sound? First one, don't miss a launchpad tomorrow with Joe at 11 a.m., 1.5 hours after the market opens. Outstanding. Yeah, y'all don't miss that. Joe, tell us what a launchpad is.
That is a great opportunity for new customers, whether you're a trial member or a subscriber, to come and talk to me, talk to, I usually have a guest, typically a university student, not always though, but you get to ask questions, whether you want to type it out or you want to be on camera and ask, just as you see Chris and I right here, ask your questions. And if there are not a stream of questions, usually we go into where do you get information? And one of the things I would show is what you just saw about outlier training with Joe. And we go through Discord, we go through verification process, we go through the position sizing and all that sort of stuff. And it's from a beginner, new customer sort of approach.
Perfect. Outstanding work, Joe. And there's a great question here. Can I unsit on my hands yet? Can I please? Of course, you can do whatever you want in the markets, right? There are unlimited opportunities to do unlimited choices in the markets every day. I'm almost there. I'm almost exactly for now. Granted, I'm not going to rush it because I'll be Joe. Between you and me, nobody else is listening. Dude, like this move, as exciting as it is, I know like most of the internet's going to FOMO like no one's business here. This makes me nervous. It makes me nervous. This move right here makes me nervous AF. Because it's so news driven. It's so news driven. However, as Larry Height told me, one of the original market wizards, the first billion-dollar hedge fund manager, if you don't follow your plan when the signals are coming, you never had a plan to begin with. So even though I'm nervous, I got to follow the plan. Because that was the whole point of backtesting the plan anyway. When rolling the option, how close will you go to the expiration date? And at that point, will you exit the trade if you can't be rolled out in time for a credit? Okay, let's go through the rolling slides. This is a great question. Rolling slides here. All right, so I want to start rolling at the first half ATR it goes in my direction. Why do I want to do that? So I have data to support this. It's not just trust me, bros. The first half come on, why? It literally is not clicking where I'm telling it to. What is happening?
Oh no.
It's got a mind of its own right now. Okay, that's so weird. The first half ATR is how much, or I should say, even losing trades go up by half an ATR at some point in their life cycle. At some point in their life cycle, even losing trades go up that much. Now, we don't know if at the first half ATR, if it's going to be a winner or loser at that point, right? Maybe somebody, some fake guru on YouTube does, but I don't, right? And because of that, I want to start reducing my risk as fast as possible. Okay. Some people start peeling off position size. We're not doing that. By rolling, we keep the position size the same, roughly the same. We allow the trade to run, and we're freeing up capital and taking partial profits on the way up. You can do anything you want with those partial profits. Those are yours to keep. Nobody can take that from you. Okay, let's go back to the rolling slide. I don't know what's going on with my mouse right now, but we'll do this. So if that first half ATR is where it starts, then every one ATR after that point, all measured from the original entry. So it's not at the 1.5 ATR, it's at half, then 1, then 2, then 3. If the stock moves in your direction, can you roll up and out for a credit? Or up and or out for a credit, I should say. So where does that start? So this is one of the reasons why, and we're going to call it the Charlotte's rule, because she was one of the Bravo students who actually pointed this out, and it made a ton of sense, and I absolutely incorporated it. Charlotte's rule is you want to have at least the number of contracts you're looking for all the way down. So we want 200 contracts all the way down at least. Okay. That is because once we can start rolling, we want the liquidity. We don't want to have to roll. We don't want to be at the 1100 and there'd be 21 after that. You can't roll to that, right? It's not liquid enough. So Charlotte's rule is actually a really, really, really smart rule. So we're going to start right there. So let's say, for example, we already owned the 6750 here. We would sell to close as one order, buy to open closer to the money. How close? That's up to you, right? You can go one strike, you can skip a couple strikes, whatever. But the key thing here is that you have to use the same liquidity standards. Meaning, if we broke down the extrinsic value to total value, okay, it needs to be that 10% bid-ask spread or whatever the case is that we're looking at here, or better, right? We're not going to take a worse liquidity standard there, okay? Now, you're probably asking yourself, well, if I roll, then I'm losing out. I'm losing out. What's really cool, man, Joe, if I could point exactly to what video it was, that'd be really neat. But earlier this year, when the silver trades were on fire, we rolled like gangbusters. And by doing so, the question was, how much did you lose by rolling down? It was 4%. It was 4%. Okay. Yes, in theory, this higher delta contract would have made you 4 extra percent. But by rolling, I had reduced my risk and reduced the capital outlay by 80%. Like that is an unbelievable feat of what we're talking about here. In fact, hang on, I think it may be over here. Let me go to unhide a couple rolling calculator. I definitely modify this a little bit. But nah, this doesn't convey the 4% and 80%. But either way, we did the math and we found that it was only a 4% difference by rolling versus not rolling. Yet I could take off 80% of risk, which is super, super cool. Okay, so back to the questions over here. So how close to expiration will I do that? So I will do it up to 1 week to expiration. I'll roll every time up to 1 week to expiration. If we're at 7 days to expiration, things change because our gamma risk explodes. The option going out of the money and having no value starts to go up in probability. And we don't want that, right? We don't want the gamma risk to work against us. So at 1 week to expiration, you got to ask yourself, am I already profitable? If the answer is no, just close the trade. It's not worth the additional risk to go along with it. Am I already profitable? Yes. Can I roll out for a credit? Yes. Then do it. If you can't roll out for a credit, don't do it. Just time to close the trade. And I've had to do that. That's just part of the game. There's nothing wrong with taking your trade, even though you can't roll it for a credit. It is way better to close your trade and take the profits you have versus leave it on and hope and pray that you don't have any gamma risk work against you. So I hope that answered the question. Senior Wahoo says, Chris saved me from being part of the 90% that blows up their account the first 90 days. That's my job. That's my literal job. And while I may only be up 0.9% for the year so far, and apologies, Mr. Burns, for being a little cranky at you, I may only be up that much so far this year, but that's okay because I understand that this is a long game. And Mr. Burns, I want you to understand as well, this is a long game. That most people blow up their account the first 90 days of trading. So Art, I'm proud of you, my dude. Art's beating me in the US Investing Championship. So way to go, man. And how long have you been trading, Art? Let's be real here. Do you plan or did you take a larger position than your plan in silver? No, I didn't. And that's just part of the game, right? The issue was that silver fell 30% overnight. Right. Now, Mahesh did ask me to run some back tests, and I did, and I want to explain that to you real quick. Whenever what we do at OVTLYR is different than everybody else, and it's one of the coolest things ever to be in a trade that is running like silver did, right? Running like silver did, like, oh, I'm not sharing my screen, I'm sorry. That's running like silver did, okay? Now, we were rolling, so we were able to keep some profits, and even though silver crashed, literally 30% overnight, I still had a net gain overall in my account. Now, a lot of people did not. A lot of people got hosed right here. And when I say that we do things different, a lot of people start peeling off as their position works. They start making their position size smaller. So for example, let's say you started with 100 contracts. As it's going up, you know what? Let me take half off. Minervini does this. Kristen Quilamacki does this. Let me take half off. Let me take a third off. Let me take a piece of it off, right? And through backtesting, the thing that we discovered, which blew my mind, is the only time, Joe, literally the one and only time that it makes sense to peel it off like this is if your stock collapses 30%. That's it.
You can't really make a plan if it's only going to happen once in a lifetime.
Right. Or once in 2026 years, right? This is the one time in the entirety of the backtest that we ran where it made sense to peel off your position on the way up. However, rolling is a totally different beast. You get to keep the same position size, but you're reducing your risk all the way up. You're taking your partial profits all the way up. So it's achieving what others are trying to do by taking off part of their position, but you get to keep all of that juicy move up. Super, super cool.
So rolling, we have specific videos on rolling right here in the OVTLYR training playlist. Hop right in here and just look for a video that has rolling plan M trades listed. That'll go through this whole process, and Chris talks about why he does it. He actually shows you how he does it. So great video. And the next question that we're going to take is, I hope that this is repeated because the screener has me swamped. Well, good luck. All you have to do is go to the how-to guides, click on that playlist, drop down to where you start seeing green videos. Every single green video is a portion of the screener. So just start with the first one and just watch them in succession. You'll get the entire screener explained, every setting explained. And if you wanted another video, you can watch Charlotte, Bravo University graduate, and I go through the screener step by step. And again, why you would choose which of the options in the filters, it's just step by step. So great opportunities there. Watch those videos. Take advantage of them because, again, you can watch them over and over again and at your own pace.
That's right. And plus, as we go through the U.S. Investing Championship, as we go through the year, as I'm putting trades on, I'm going to go through this. Now, I may not go in through all the detail, but I'm going to show you step by step what I'm doing. And think of it this way, right? There's time for education, and then there's time for execution, right? When it's time to trade, I don't have time to go through and explain every little nuance. That's why we put out as much content as we do. So by the time we get to the trading, you're going to know all the nuances, right? Consider it like brain surgery, okay? When the surgeon is operating on someone's brain, they don't have time to explain every little nuance that they're doing. They just need to execute. They need to get in, they need to get out, they need to do what they need to do. It's exactly the same watching a professional investor at work, okay? But I'm going to help you out, do as much as I possibly can.
Exactly. Trading View, giving you some trouble right here. Set up your charts like a pro. There's a whole video on it. Piece of cake.
There we go. Okay, cool. Joe, I have a meeting in 5 minutes, so let's blow through as many questions of these as possible. Do you have a series of trader interviews with any of the top U.S. investors? Oh, of the outliers. So what I'm doing right now, and Simon's helping me out, is we are interviewing as many people who have previously competed as possible. Whomever is willing to chat with us, we're trying to prioritize them. And then we are going to work on the outlier crew, because I want to give you guys all the kudos, all the respect, because a lot of you have not been trading for long at all. And to be brave enough to get into the U.S. Investing Championship is huge. And some of y'all are putting up unbelievable. We literally may have the U.S. Investing Champion in the outlier group already. Like, it's very possible. Like, the number one winner could be in our group. So the answer is, it's coming. They are coming, but we're going to get through all these old people first before I really give our outliers the kudos they deserve. And Joe is first. Joe is first, if you can believe that. Joe, we're going to interview him on Thursday.
Oh, yeah.
Can you believe that? This random guy is going to talk to this other random guy on Thursday.
Here we go.
Josh says, with CanSlim being the basis for the trading play, CanSlim is not my basis at all. Josh, it may be for a lot of people, but it is personally not for me at all. Now, that's okay. A lot of people trade it that way. It's just not for me. Wouldn't we like to see our follow through before committing our resources to the market? Again, CanSlim is its own thing. Outlier is totally different. So just going to follow the plan. Is there a way you can show open interest in TradingView options chain? I don't know. I don't use the TradingView option chains. I just go straight to the broker platform. I mean, the reason being is that it's more clicks is more worse, Joe. I want it to be as simple as possible for my itty bitty baby brain. Can you put in a limit order for under the 10%? And if it gets filled, you're good. You know what? Gated, you got a great point. You got a great point. So if it were 10.3, we could still put a limit in for somewhere in the midpoint and get filled. Yeah, okay. I'm up for that. I like it. Tell you what, gated. Goated? Is it gated or goated? I'll go with goated. Because that was a pretty goated question, as the kids would say. Let's do this. We're gonna add a little thing right here, the goated formula. Goated formula. Put in the limit order under the 10% if it is slightly over. There you go. The goated formula right there. The Charlotte rule and the goated formula. I actually like that. That makes a lot of sense. So rather than going to 1080, I could put it in for 1030. I think I probably still have it up right here. Yeah, I could put it's at 1090 right now. Maybe I could get filled at 1030, and that would be under the 10%. You're right. I love it. Well done, goated formula. We're going to learn more about how to trade. I don't know, just some other YouTube channel.
I always start with a price lower than mid, actually, and sometimes it actually gets filled.
Lower than mid and you get filled?
Yeah, sometimes. Yeah.
No way. Wow. Cool. I am used to the opposite, where I'm getting filled at the ask. Can you add the spread and trade your settings and add the column? I don't think you can. I asked Lex about that, and he said that because we have a partnership with him, that we could basically add whatever we wanted. But I don't think that is created yet. However, that would be super easy.
Yeah, since you mentioned the partnership with Lex, there is a deal with a broker, and it is Tradier. And if you Google search OVTLYR Tradier, you will get the.
No, that's not it. Where is it at? Trade.tradier.com/OVTLYR.
There you go.
There is a deal with them. You get, I think it's 6 months of, granted, I could be talking way out my backside. 6 months of Tradier Pro for free, plus $150 added to your account for being an OVTLYR customer. It's actually a pretty sweet deal. So yeah, definitely go check that out. Is there a special software? Or do you have to develop your own way of backtesting? So Woofta is a great question. I went years manually backtesting. Now for me, I loved it. I loved the game. So that was no big deal. That's like playing Mario over and over and over, right? You're backtesting your strategies in Mario. There is a backtester coming. Don't ask me when, because I don't have an answer for you. And don't ask me a week from now when it's coming, because I still won't have an answer for you. But we are building, actually, Deep Thought is like out and on the Artemis mission to the moon creating this right now. And he's amazing. A backtester that you will be able to use, put in all the criteria that you're looking for, and it will spit out the numbers, and it's just like instantly super fast. So it's really, really cool. I am a master trader. That is a real thing. I appreciate that. If you want to learn, go to OVTLYR Trading with Joe and slow-mo speed. There you go. I like that, Jeff. Thank you for that. That's actually a great idea. Mr. Burns, I guess he doesn't hate me. I love you, Mr. Burns. Great video. This is one we all need to hype and like when it goes live. I agree. How far out do you set the expiration date when earnings is in the mix? Okay, so great question. It does not matter to me. Wherever earnings are, I will trade it. I will trade it all the way up to the day of earnings. Let's go to Meta real quick. I will trade it all the way up to the day of earnings, and then I will get out. Okay. Now, this is not a perfect example, but Meta, I would trade it running up into earnings. I will not trade it after earnings. No, but Chris, you're going to miss out on these gains. I don't care. It's additional risk that I'm not willing to take. So it doesn't matter really where to me the earnings fall, as long as I'm aware. Because one time, Joe, I missed the earnings, and the market gods blessed me with a 5% up move in Bank of America. It may have been right here in November 2024. I had, maybe not, but point is, I had no idea earnings were coming. And yeah, I got blessed bigly because it went on after that. That was not on purpose, and I don't ever try to do that.
Yeah.
On the position sizing dashboard, what's meant by the column strike considered? Okay, strike considered is literally nothing more than just a note spot, right? Because a lot of times I'm like, oh, look at the 67.5 or the 65 strike, something like that. That's all it means. There is a formula right here that shows you the dollar math of what that percent risk is. So you could do it 1% and you'll see how it changes. But that's all it is. It's just a note spot. In fact, I could just change this to like notes. There you go. There you go. It's just notes. That's all. Let's see. Okay, so there's the new goated formula. Well done right there. Hey, by the way, let's pay respects to the goated formula by typing gated, G-A-T-E-D, in the chat, because he definitely deserves a little bit credit of that. Do you roll winners out too? Of course. Yeah. I mean, you're not rolling losers. You're only rolling winners. I mean, and think of it mathematically, right? If your trade is running like this, it's only a winner. And the rules are it runs one ATR in your direction. You start rolling. It's only winners that you roll. You don't actually roll losers. I pray that this will be repeated. Oh, dude, you can always go back to this video as many times as you want. How much is OVTLYR? It's only 82 cents a day. Thank you, Bucksters. It's only 82 cents a day. And you know what? I'm very excited, Joe. I think we could find some Masters of the Universe money here very soon. When we say we're mentored by Chris and Joe, Masters of the Universe unlocked. I agree. Joe, I have another meeting I need to get to. I'm already late. So let's get out of here. Y'all have if you're ready to save time, make money, start winning with less risk, what do you think they should do, Joe?
They should go to OVTLYR.com and sign up with an account. Consider trial membership. I think is it a week or 2 weeks? And then also give it a try. You'll find that you like it, and then you'll become a subscriber. Check us out on Discord. Ask all the questions you want in the training channel. Come back and watch one of these videos as well.
Watch one of these videos, and we'll talk soon.